Here we have the charts of the Nifty, and before that we'll see the Bollinger Bands. It's absolute consolidation. The bands are contracting, consolidating sideways movement. This is the daily Nifty, and Banknifty also doing the same, consolidating and absolutely sideways. That's the daily what the charts are projecting out. Now, apart from that, if you just hide that, right? So what happened today is it's an inverted hammer. Inverted hammer is often indicative of reversal from whichever trend it's in. So it's in downtrend. So it's probably an indication of a reversal from here, but it's not mandatory. Only if the candle's high is breached can be seen. So basically, what has happened is today it tried to move up. It moved up above the high of the previous two candles, and then the selling pressure. It was an event day, minor event day. It's RBI interest rate decision. Nothing much happened as expected, but that makes the market volatile. And events would make market. And that was the outcome of the Haryana polls and J&K polls and all that. So that's still not fully digested by the market. So market is naturally volatile, but there is an attempt that failed. That's what you can say. But the numbers picked up and managed to climb and stay above the RSI 40. Trend remains to be negative itself. So, and what has happened is it is attempted to move above the 50 exponential moving average, which didn't happen. Banknifty, on the other hand, also did the same, trying to move substantially up, but ended up closing above the 100 exponential moving average. 50 is still already lost, and managed to climb above that as well. So that's the resistance zone. We had marked resistance zone at 51,970 or 52,000. That's the zone where the rest has come into play today, as well as day first today. That's the zone where the market is finding resistance. So it has to move above that. It has to move and close above the 52 with the green candle, probably above the 52,200 where the 20 exponential moving average also is taking out. That's where we can say that it's probably a reversal. But until then, the price action also is negative. Moving average resistance selecting, previous resistance selecting, all that trouble. So this is also inverted hammer. Inverted hammer in the top or the bottom of the trend indicates its potential for a reversal from here, but not a guarantee. And also this is not exactly at the bottom. It's 2 candles away, so it's may not be relevant, may not be that effective. But since a reversal candlestick is seen, I mentioned that's what it appears. So the big size indicates a selling pressure. Intraday it was a flattish day, and Nifty was slightly trending down, but look at Banknifty. So Banknifty expiry today, absolute range bound post afternoon, absolute flat day. Right, within a range bound flat consolidation is what you see there. Nifty was slightly trying to move downside in the afternoon, but Banknifty. So this is the price action of the 50-minute charts of the day. Right. So momentum and trend remains negative. Those climb will be sideways. So if it remains there in the sideways zones, instead of once again falling back to this bearish zones as far as below 40, unless that happens, things should be okay. The trend has still negative. It does not cross out to the bullish zones back on the short term we are talking about. So yeah, so it's a pause after a big fall that happened yesterday, and it turned into consolidation today, confirmed. Right now, any end of the consolidation will be either a breakout or a climb above the moving average resistances at at these levels, right? 50 to 200, and for the case of Nifty, it's above the 25, 400, 350, 400 that zone. So if you look at the levels, the first major resistance, of course, would be this 20 exponential moving average that's coming at 25,350. So today's close is flattest close. You can see that it's absolutely flat after all the action. It ended up as flat. So the first resistance would be 20 exponential moving average of 25,356. Then you have the gap at 25,739, and then 25,850 with the previous resistance there. Downside, first previous support would be at 24,700 that zones, and then the 100 exponential moving average at 24,400 is there. That is also breached. Previous low is at 23,893. Before that, 24,000 is also there support. Nifty, the first resistance will be the 50 exponential moving average resistance zone where it reversed today. Let's say near the 52,000. Then 52,200 where the 20 expression moving average is there. After there is also 52,300 also as per previous resistance. So 52,800 is where the gap resistance is coming. That's the major resistance after that. Okay. Downside, the previous swing low at 50,000 would be the major 50,200 and 50,000 rounding number is to be made. So previous swing low and the rounding number 50,000 is going to be major support. That is breach, it goes to the 49,650. The next previous swing low is coming. So 50,000 is going to be crucial. So that previous swing low is also breached. Then 200 expansion moving average comes at 49,100 nearby zones. That's the supports there. The momentum we have talked. Open interest towards an expiry of the Nifty. So this PGR is negative. Options levels are very wide. It's at 24,000 and 25,500. So supports are very far away. Resistance is also quite far away. 25,500 where the highest call writing is the. So yeah, anything would happen in this range. Doesn't give much clue before the expiry. It's weekly expiry anyway. So about if you look what the Fyers data has not come in. Oh, it has come in. So it was also it's 4,500 selling. So they have been relentlessly selling. Fyers have been selling consistently. So probably it's 50,000 more of selling that has happened in just previous 7 days or 8 days. Continuous selling for the Fyers is a worry, and that is a worry. Levels we already seen. So what will happen today is the big fall is happening in the HDFC Bank, Lens, and the biggest falls in the ITC. The FMCG is breaking down. Let's see trouble. The rest is all either flat or slightly green. So all the indices, if you see, has got hit badly today. The red ones, it's FMCG which is found with the BRS zones. That's the only sector in the medium term found. It's all green or flat. Right. So FMCG, something is wrong, probably because of the inflation worries and all this following the RBI credit card policy or something. But FMCG has found fear zones. So otherwise, you don't see anything in bearish other than the FMCG. They are all either in bullish or in the sideways in the short term. Right. Same with the heavyweights also. You don't see much of them in the bear zones. Just can manage to climb back in the sideways. All of the major heavyweights contribute maximum to the dice. If they are selling also, the US market is green. Crude oil has been falling, but I think yesterday it stopped. Yeah, so it has reached the 78 peak, and then there was the war fear, and for some reason that fear is gone and it's falling down. So today is also 2% down oil. So oil down is good for us. Gold is at the very top, but it's red day continuously for multiple days, consolidating, but it's not very far from the all-time highs. Currency is spiking. Rupees weak has been, dollar is also spiking up. So that's a global cues, not the war worries and China upsurge. Is it continue to be poor cues, but otherwise currencies more or less the same. Oil is fine. US market is also not great at the very top in spite of all the war, and I think US markets are green. So that's probably positive, but FIs are selling relentlessly. That's a big worry. Right? That's the biggest worry. Charts are negative. It is negative biased. The fall may have paused and it's consolidating, but it will roll out a further fall. Bearishness is it's bearish bias basically. Right? There is a possibility that market can take a little more move up and then make a lower high, lower low pattern. So it can move a little more up, meet with the 20 expansion moving average and move up. So unless you see a solid close about 20 expansion moving average, things are bearish. So stay cautious, play it safe, have your portions and portfolio hedged. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing.